The next one down is going to be coverage C, or personal property. Again, that's just going to be a percentage, and this will vary by carrier. There's not as much of a consistency in the percentage, but the way the insurance companies come up with that amount of coverage for your personal property is a percentage of the coverage A, the dwelling amount. And they kind of say, hey, this is what we think is on average a good percentage to have. It'll range between a 40% and a 75%. So that's a big range depending on the carriers, or even depending on the packages that are offered by the carrier. So it's something to think about. I often tell people that coverage amount sounds like a big number. So if you're at a 50% coverage amount on that $200,000, that means you got $100,000 for contents. That $100,000 seems like a lot, but most people don't ever replace everything. You buy things slowly. And oftentimes as you're starting out in life, you're given certain things, right? Somebody will give you like, hey, I got an old couch, I'm not using it anymore. You can take it and use it. And so you accumulate a lot of stuff and you never buy it all at once. And you don't typically buy everything that you have anyways, because some stuff is gifted to you. In the event of a total loss in a fire, now you have to go and replace everything, buying it new. And that adds up really quick. So it can seem like a daunting number, but in the reality, if you think about all your pots and pans, all your clothes, all your furniture, all of your finishes like knickknacks, TVs, all of those things, socks add up. And that's what that number is. Now, again, there's two ways you can cover your personal property. One is actual cash value, which they're going to give you the depreciated value. This would be an easier example. So if you have a couch and they say, hey, the average life expectancy of a couch is 10 years. That couch you've owned for 5 years. To replace the couch is, we'll say, $5,000. But because it's halfway through its life expectancy, they only give you $2,500. They're only giving you half of the value of the couch. On a replacement cost basis, they say, hey, to go buy that same couch today is actually $7,000. Now they'll pay the $7,000 for you to go buy the same type of couch that you had before, brand new. So it's a really important coverage to have at replacement cost. It does change your premiums. Obviously, when you have better coverage, it's going to be more expensive because the insurance company is going to pay out a lot more in the event of a claim, but it really makes a big difference in the claim.